everyone, and thanks for checking out my channel. Being a look tonight at WTI crude oil, going through a couple of more things than what I do usually when looking at the chart. Having a look at the futures contract situation, look at some data about the quote report as I do on every weekend, looking at the supply demand situation for what we can know for now, and looking for direction for next week. So let's get started with the futures contract situation. So looking at the different contracts, so we can see that we're still having between the June and July contract significant contango, and even bigger with August. So we are moving June, July on 6%, July, August 7%, and we having the June contract FND, which is at the end of next week, or actually Monday the week after, just here. When we look at the volume, and that's something I believe is actually potentially making the sharp drop less likely, because most of the traders would have actually switched to the July contract quite a while ago. When we look at the volumes, definitely on the June contract, we can see that the volume, they are still actually quite big. They're not that small. They look small because of that massive here drop we have. It was almost 700,000. So that's a massive spike we had on that drop here at the end of the collapse of the May contract. So these numbers are still reasonably big, but we can see that the last week, which is starting roughly here, we didn't see big volumes, and some of the close did actually, or some short movement did actually see some closure on the June contract. Contrary, the July contract got traded with a bit more volume toward the end, which is logical. So more numbers of contracts traded there, and I think that will put some floor under any fall should we actually approach the FND for the June contract. As for the number, so the July contract is by far the most traded, with 350k contracts, and then August and September still seeing quite a lot of activities, roughly near what is traded for July. So again, I think on the volume side, it will likely avoid the same thing that happened to the May contract. I don't believe we will see negative price or anything like this even for the June contract, because it's been anticipated and the situation is improving a little bit on the supply demand side. Now, having a look at what happened during the last quote report time, which was between the 28th and the 5th of May, so we could see a clear uptrend, almost no pullback, just a little bit here in the middle around just below $20, then it moved back up to the 25 straight away almost. So we can see from the quote report, the open interest dropped by 17k at that time, which is not really giving a lot of confidence that the move can actually sustain and continue. So we've seen last week that did actually been quite choppy between 26 and dropped back down to 23. So it was really range trading. Could see that the edges, they have massively reduced their short position. That was probably the main reason for that move, because the management did increase only 7k to the net long position, which is now sitting at 330, which I was expecting to be much higher. So they're still 100k, 130k away from the net long record, so still a bit of room to go. Did they actually continue to accumulate long here? That's the question, and I would say, based on the chart, that no, but we won't know until we get the numbers on the end of next week. So yeah, I don't think there's a lot of would I say like a really strength in that move in terms of the fundamentals and having a major switch from everybody, and that reduction again from the edges of the short contracts to me is a little bit definitely going against the theory that the move will actually continue much higher. Same with the managed money. They kept on reducing long. I think it was 2k, so not significant, but didn't add at many long, and the open interest dropping is definitely not something that is actually in favor of continuation of the move. In terms of the supply demand, the US supply I think is down 1 million barrels a day at the moment, so back to 12, which is still a very high number despite the number of rigs put off. So we're expecting the OPEC to supply to cut by another 10 million barrels a day, so we will see. Again, I had some doubt they will actually be able to reach that figure, so we will see in the coming days or so, or potentially weeks, if they can actually achieve this. But even despite this cut, so let's say 11, potentially 12, if we're adding a bit of what Russia is doing and the Scandinavian countries as well, but basically the oversupply for May is still estimated to be between 7 and 13 million barrels a day, so that's still massive oversupply. The storage issue seems to be reducing because the demand is picking up a little bit, so that's putting a bit less pressure on the storage side, so also helping the June contract to actually stay afloat for now. Looking at the chart, so we broke down that trend line, so which was until it touched it here. I was expecting it to bounce back on the 24, just below 25, and then since then it got actually stuck just underneath. And we can see on the 4 hours, on the 4 hours chart, we have a clear bearish divergence here from that point. So I think a retracement to 22 is very much likely. If we do consider that this move from here to here was just one swing to that position there, then we could potentially go back down and revisit the $18. Now, in terms of the current price action, it's been actually holding on relatively well on Friday. So we have that channel that we could consider to be a bear flag. Also the flag is actually getting a little bit too long for this, but it's a possibility that we would exit this lower. That could actually go to the $20 area, which I think also is very much possible. So that would be on the 200 MA on the hourly. So again, another target. If it does break down that level, I would say 24 comfortably, because we had a couple of rejection here that we need to be careful. But if we can get proper break under 23, we'll get quickly, of course, 22.5, but then 20, and potentially extending to 18 should we actually retrace all the move here from that, the origin of the divergence there. More concerning probably for the bullish scenario is that the 4 hours is also showing a nice divergence, very clear, no argument here, and on that one the move is straight. So again, the $18 comes to mind. We'll get there. Of course, as usual with trading, we have no idea what will happen, and if it does happen, if it's possible, but it's just a possibility. A break above is possible as well, less likely in my opinion, but we could still exit here and go retest potentially the trend line at 27. But the price action we had on the on that move here, it's really rejected clearly, and here as well, and even when clearly not pointing for the powerful momentum following any move up. So we will see. This is grinding up slowly. It could break out. We will see that on Monday, but also breaking down during the course of the day and as we are approaching the FND. In terms of how it could move, should the trend line here hold on, we're basically having roughly between 6 points on the RSI, which is roughly equals to one of this move from 24 to about, let's say, 24.7. So another dollars up potential until we reach to that trend line. That would bring us to 25. Yes, so 25 will be the level to watch, potentially a bit higher, and see how it does react on that trend line. Should the price shoot up on Monday? If it does show some rejection on the trend line here, we are extremely likely to move down lower. So that would be something like this, and then a move like that. Then what will happen next will be the start of the new contract. It could potentially bounce back either a bit lower. Should we continue there and see some momentum returning for some move back a bit higher? That will of course all depend on the demand and the lockdown situation in many countries and how things will happen next. But short term, I think we can see some move up beginning of the week, then potentially retracement down. So we'll see where it stops. But the targets, I don't believe that the June contract will actually drop lower than 18. Would be already quite low target. It could also stop around the 20 area. It would be probably safer to close any shorts by then. So yes, that's about it. If you have any comments and anything you want to share about the futures contract, the situation, how the contango could actually push that lower, and all these things, please share, don't hesitate. And as usual, wish you safe trading. Manage well your position size with WTI, important, especially as we approach the end of the contract, expecting a lot of volatility. And speak to you soon. Cheers, bye.